You're listening to The Local Maximum, episode 191.
Time to expand your perspective. Welcome to The Local Maximum. Now, here's your host, Max Sklar.
Welcome, everyone. Welcome. You have reached another Local Maximum. I hope you enjoyed last week's show. It was kind of a quirky show, especially at the end when I went on about the principle of inclusion and exclusion. So if you're interested in that math stuff that might seem a little different, but actually it's very useful stuff. Definitely check it out. And then of course all the latest news. What was that one? Oh yeah, the smart toilet update. Always good to do though. I think now we have to look at how many updates we've done on smart toilets versus how many updates we've done on self-driving cars. I wonder if they're somehow equal at this point. So anyway, I hope you enjoy the work that's being done on the studio here. As you can see, we'll probably get to that in a future episode. If you've been listening to the Local Maximum for a while, this is episode 191. I've been doing this every single week. I've been putting out an episode, and nobody's standing here making me do it. Nobody's forcing me. Just every single week, I come up with a topic and we talk about it. And I think we've learned a lot and educated a lot of people, and definitely expanded our perspective. So if you have been getting a lot of value out of the show, if you've been listening for a while, please consider supporting us on Locals. That's the URL for that is maximum.locals.com. How much better can you get than that? You can talk directly to me on there very easily. You can have conversations with other people who listen to this show about the episodes and about other topics that are interesting to them. So once again, maximum.locals.com. Please consider supporting the show. All right. I'm always looking for the most knowledgeable people to talk about the progression of technology here on the Local Maximum. And our conversation today that you are about to hear really covers the span from the rise of social media giants, from when everybody loves them to when everyone hates them. That's kind of the story of the 21st century so far. And then, of course, the emergence of blockchain technology and the projects going on there. We even touched on some trillion-dollar questions like how should the internet support content if not from big data and ad targeting? Because we tackle trillion-dollar questions here on the Local Maximum. My next guest's experience ranges from startups to capital management, and his work resume includes both Apple and MySpace. Believe it or not, he's the founder of dChained, which provides educational resources to people interested in crypto and the Bitcoin space. Ed McCormack. Ed McCormack, you've reached the Local Maximum. Welcome to the show.
Max, thanks for having me on.
I'm looking forward to this conversation. I feel like I'm having trouble trying to figure out where to start. I feel like there's so much stuff we could talk about. I know you teach people about blockchain and about all the different blockchain projects out there. And so I want to get into that. But I think, when I spoke to you on the phone the other day, I really want to zoom out to the bigger picture, which is something we do all the time here on the Local Maximum. Like, where the tech industry has gone over the last 10 years and whether we've made a wrong turn. But tell me a little bit about your background and where you got started in both on the technology space and the crypto space.
Yeah, and it's a great place to start. Talking about making the wrong turn. Started out on the wrong foot 15 years ago when I came into tech. I joined a little site at that point called MySpace. It wasn't little, it was fairly large, and it was talking about sort of making wrong turns. I think you and I were talking prior to this podcast. I vividly remember the meeting where I was sitting in the room, and one of the co-founders at that time wasn't Tom.
I always wish, I always feel like if I worked at MySpace, I would love to have like Tom always at the front of the room saying, okay, guys, here's what we're going to do. That's sort of, but
the saying goes,
apparently it's
Tom has more friends, but Craig from Craigslist has weirder friends. So, I remember in that meeting, a question was asked, are we worried about Facebook? At that time, you needed an EDU email address to get it. And the co-founder's name is Chris, won't say his last name, but clearly said, no, that's a niche college website. We're open to the public. And how quickly the tides turned very fast on that one. But yeah, I mean, ultimately, throughout this time, though, it's been interesting to see sort of the common denominator is these undercurrents that happen, either led by tech initially or products that are rolling out to, tie into things that are going on, in day-to-day life. So, I saw the rise of, with social media, and coincidentally, I went to school up in Boston, and the college I went to was one of the first universities for Facebook at that point. So fascinating to see sort of that build up. And social media, there was no social media prior to that. You had GeoCities, which I'll blow you away. I'll blow you away with my GIFs. And my website counters.
I never had a GeoCities. I always, it was not, I could have, but it was difficult. Like you had to really, I don't know. I guess that was before I put up websites and stuff. There was no Squarespace or anything like that. I'll put it that way.
Yeah, you had to have thick skin because it's sort of like those photos of your preteen years where you're like, oh, I wish I never saw that. I wish that just disappeared from this existence. But seeing sort of that blend in with 4G connectivity, well, at the time it's 3G into 4G, and you started to see, these smartphone devices that were actually smartphones and not just glorified Palm Pilots, start to open up a whole nother way of engaging with content. The app space built out, and around that time I headed over to Apple. And as things progressed, you continued to see sort of things continue to evolve, not just in tech, but also in music and entertainment. And ultimately, sort of what got me to where we are now is privacy. And about 5 years ago, coincidentally almost to the day, we had a little thing that happened, which was Cambridge Analytica. And the public became aware of something, that there are really only a select number of companies out there that collect a insane amount of data. And while they use that to monetize their platform and provide you services, that data is susceptible to get into the hands of some bad actors. And when that happens, things can ultimately turn bad. So I'll leave it at that, not going political. But I want to get into that later. But before we start, I actually want to go back to MySpace a little bit, because when were you in MySpace, and when did that meeting that you remember vividly take place? 2007. 2007.
Okay, and that was that a lot of people who were in college at the time were already hooked by that point. It feels like, I guess, looking retroactively, it was almost baked in. But what lesson did you take away from that whole episode?
And funny enough, whenever I say MySpace, people focus in on the product and ultimately what happened. But I probably learned more at that company than any other experience in my career. One, in terms of the team that was built. Yeah. You didn't have
not surprised
that sold itself. Like, you needed a rock star group, and those people went on to very successful careers at bigger platforms. But yeah, the lesson was complacency. What is the result? What is what will happen when a internet-based or tech company becomes complacent? And that's ultimately what happened. They tried to be everything to everybody, but there really was no innovation going on that platform. And it opened the door for Facebook to just kick it in. And from there, they never got the baton back.
Yeah. Now, fast forward to, I guess it was, when was Cambridge Analytica, like 2017 or something? 16?
Yeah.
I remember at the time, like, there was all this outrage, and I was just like, yeah, it's bad, but I know this happens. This has been happening for a while. Facebook in 2005, we know, would just give out people's data to whoever. In terms of politics, like, I was well aware that going back to, 2010, 12, there was tons of just data mining and stuff, and they had no scruples on who they can get their hands on. So why all of a sudden was it coming to a head?
Yeah, and it's in the digital and ad tech world, it's a dirty little secret that's been known for really since the start. It's pretty much how it's even in people's pitch decks. We have all of this data on people, and then you ask, well,
sure,
do they know? No, they don't. I think what happened, and I recall even further back, at the time, Eric Schmidt was the CEO of Google, and he was in an interview, and the person giving the interview asked directly, Google knows a lot of the dirty secrets that people are looking up and a lot of information on them, especially now that you have Gmail. What do you say to people who are concerned about you having the information? And, Eric Schmidt, in joking jest, said, well, when someone turns 18 years old, they have the right in the US to change their name. If you're very concerned, I would advise you do so. Which sort of had a lot of truth in that joke. But
I mean, you could also kind of find out what someone's name used to be, though. So, I mean,
oh yeah, there's hard to find. Yeah, hard to.
It might be hard to find, but
yeah. I mean, ultimately, this is something that a lot of people have known for a lot of time. In the digital world, in the tech industry, but it needed sort of a jolt. It needed to be just displayed in people's faces for them to realize, like, oh wow, I can't believe that information's out there. And truthfully, you didn't have to look any further. All you have to look at is that crazy uncle or aunt who just goes on daily rants on Facebook and say, oh, they could probably be, militiaed. They could probably become sort of used as a tool. And people saw that, and people saw sort of how people can be manipulated or taken advantage of, and how easy it is and unfettered it becomes if not checked. Yeah.
So if we're going to talk about where we went wrong, and I hate to make that the theme because I think we're going to go through some silver linings, not just silver linings. I think we're going to end with some hopeful stuff, which is the stuff you're doing now. But like, one of the ones is privacy. Okay, we talk about that a lot. I actually think, and I don't know. Well, I actually think another one is like innovation. I feel like the time that you were at MySpace, for example, maybe 2008, all the way up to, going back to the 90s and then all the way up to maybe 2013, the internet had so much, momentum where there'd be all these cool new things that we can do. Every few months, something would come out. And now I feel like there's just far less, maybe it's just a problem of maturity where there's just far less innovation happening. I don't know about you. I listened to the Apple event yesterday, and it was just very, it was very just, we're just adding a little bit more of what we already have to all our devices. Gone are the days where Steve Jobs is standing up there and introducing the iPad or whatever. It's almost like they've gone from innovation to exploitation. And maybe that connects back to the privacy, where it's now we're not building new stuff and capturing the imagination. We're just trying to exploit what we have. And that shift maybe became a lot more pronounced somewhere in the middle of the 2010s.
Yeah, I think it also has to do with competition. If you look at how many of these websites operate, it's through advertising revenue. And around 2013, you saw most of the dollars become concentrated to 2 or 3 companies. And ultimately what is then created is a scenario where you're operating, if you're not in those 2 or 3, on much slimmer margins and operating budgets. Venture capitalists are starting to question sort of the vitality of these companies and whether they'll actually ever produce a profit. There were years where it didn't matter. You just had growth potential and you would just get, these 9-figure checks. You saw that the tides turned slightly around that point. And unfortunately, tying back into innovation, what happens is that either a private equity firm will bring in a CEO or a management team that is going to say who's directly tied to revenue, and those who are not, you start to see layoffs, and you start to see the teams start to get thinned out.
Attrition.
And unfortunately, that's where you see a lot of people who are in, the data groups in the tech space. So product guys, engineers, that's where a lot of cuts happen. And it's mind blowing because it's backwards. It's completely backwards, in my opinion. Maybe you don't need 100 sales reps. That's a wild thing to say. Maybe you only need 20, and use that money that you save and become a little more efficient on sales. Use that money to sort of invest in R&D. That sort of went away. And you saw this emergence of websites who do one thing really well, but really didn't have any type of moat or differentiation around it. So then all of a sudden other sites started copying it. And now you have a situation where if you ask someone, what's the real difference between TikTok, Twitter, Instagram, and Clubhouse is where people who got arrested in your teen years for identity theft, that's where they go. But other than that, what is the difference between all those companies? And at the end of the day, you're like, from a product standpoint, I don't really know, because you could pretty much do any of that on any of those platforms if they really wanted to.
Yeah. So, okay. So tell me about how you got into crypto to begin with. And as I'm saying this, I realized, Bitcoin was being invented and the blockchain was being invented in 2007, 2008, 2009. When you were at MySpace, it almost like, there's something funny about the fact that the height of MySpace and the invention of Bitcoin were actually around the same time. They don't really feel like contemporary technology. But let's start there.
And this is going to be sacrilegious. Bitcoin really wasn't really revolutionary in terms of the operating model. I mean, proof of work, which requires these miners to add transactions to the blockchain, that was actually getting researched back in 2003, 2004, 2005. Cambridge University put out a white paper because they were exploring this as a means of trying to quell spam. They wanted spammers or potential people to show some type of work, proof of work, and ultimately got to the point where they realized that these individuals are going to just get better and better computing resources, and eventually it was just going to hurt the regular end user. It was going to make mail just impossible.
I remember reading about ideas where it was like, okay, if I wanted to send someone an email, I'd have to I'd have to pay a little bit, and then maybe that would be one way to reduce spam. We were talking about this in the 2000s.
Yeah, and think about that though. How many business emails that someone sends out, or how many at that point? At least for me, I was sending out a lot more email compared to texts as a ratio. A lot, significantly more email. It would have just absolutely just kneecapped sort of that technology at that point. So, or adoption in general. So ultimately, Bitcoin, which came out back in 2009. It was very unique because it sort of was operating in an anarchist kind of way, where rather than, because YouTube at that point had just got acquired, I want to say 20, it was around that time. I
think it was 2006.
You really started 2006, yeah. So you saw the workings of these mini conglomerates being created, and this was sort of the new platform out there that was kind of like a canary in the coal mine, saying, "Hey, we should turn now." So it was very interesting, but it was fascinating to see sort of how Bitcoin ultimately then sort of led a lot of the big tech companies to actually start piling in, and there have been tech companies that have been involved with it for almost since the start, as these little R&D projects in the background. And
can you give like an example?
IBM has been part of blockchain technology for a very long time. Hyperledger is probably the most advanced blockchain for enterprise, for business. That's certainly not something that they could have come up with in a 12-month period, especially the rate of adoption that it's gotten from other companies using blockchain. But it's funny to see how they sort of kept that in the closet and in the dark, and it didn't really expose the investments that they were making at the time. So it's been around. It's been something that I think the tech industry and specifically, the engineering teams and product teams have been looking at as a potential means of introducing new products and services, but it's not something that they came out with a consumer-facing announcement or product.
Right. So, okay. So what drives your interest in, would you say it's in crypto and in the blockchain space? Are you more like on the investing side or the using side, or what do you like to talk about with kind of the content that you're?
I'm fascinated by the companies who are actually building on blockchain and using cryptocurrency, more so, I should say, tokens as fundraising.
Right.
So,
and let's actually go to the difference between a cryptocurrency and a token. I don't know if it's that. Well, there are probably people who are wondering. So, why don't you give the definition?
Or listening and just holding their fist in the air, saying they're not the same.
Yeah,
cryptocurrency, maybe. And for many people, it's interchangeable. But by definition, cryptocurrency is a native digital currency that is associated with a blockchain. So that's why Bitcoin is a cryptocurrency, Cardano is a cryptocurrency, Ethereum is a cryptocurrency. There are other ones out there as well. A token is basically a digital share. It's representative of some form of either equity or value for a specific project built on blockchain. And that's where you'll see, healthcare groups or shipping groups, data groups will release tokens that ultimately people can then use for their service. So that's, for me, I'm certainly interested in cryptocurrency because that's sort of the basis of all the economics of the space. But to see a lot of these startups opt to go down the path of raising capital and raising money to build on blockchain rather than perhaps going down the venture capital route where they give up 30-40% of their business. To me, that's fascinating because you're seeing the barrier to entry significantly lowered for new innovation. And to me, that's going back to your the topic before, this is going to fuel innovation moving forward. Having these conglomerates is incredibly anti-competitive. So that's, for me, thrilling.
Yeah. How are you worried about like the SEC coming in and declaring these things securities and sort of making it like very difficult for companies to issue these tokens?
Sure. And I think you see a general, directionally, companies are moving towards, compliance and either being forthcoming and saying, look, we should be deemed a security, or, we're going to be doing all the different compliance checks, like know your customer, anti-money laundering. But the SEC has a fight on their hands right now. They, and for any listener who's sort of not familiar, the day before, the former SEC chairman, his name was Jay Clayton, before he stepped down, one day decided to file a lawsuit against Ripple Labs. Ripple Labs is known, they created the cryptocurrency Ripple, but
so that's
it's a
XR.
fintech. XRP. It's a fintech company. Yeah. So XRP is just the currency that's used, but they license out their SaaS platform. And it's pretty awesome. It's a really awesome product to check out. It's called RippleNet. But ultimately, in doing so, the whole new regime that came in with the Biden administration, you had Gary Gensler, who's a former MIT professor, you had Lael Brainerd, who's very familiar. She's the head of the Fed. She was on several Senate committees regarding cryptocurrency. We had this pro-crypto regime step in, or I would say neutral. They're not anti, like the former. And what became interesting is that the Ripple case, which was really about its current CEO and former CEO, really was a bad move on the SEC because Ripple didn't lay down. And they actually subpoenaed the SEC to release some documents that have been horrifically damning. Like there was a document that just got released that showed the SEC released an employee investing policy that said that their employees are permitted to buy, hold, and sell cryptocurrency because it's not deemed a security. Mind-blowing, because everything else that is security, if you're an employee of the SEC, there are heavy, heavy restrictions. Just like if you work at
so now you could be involved in like playing the market and regulating them at the same time, is what you're saying. is what they're.
Well, yeah, at that time this is, back in 2018.
Yeah.
They were disclosing to their employees that digital assets are not cryptocurrencies, and they're not. I'm sorry, they're not securities.
Not securities.
So they are.
Okay.
Yeah, they're not under the umbrella or sort of the oversight of the SEC.
Right.
Very interesting. And then the other piece was
so they contradicted themselves.
Contradicts everything.
Yeah.
And then the other piece was that there were two former commissioners within the SEC, so high-ranking executives who came out as whistleblowers, and Ripple got them to testify. They deposed, and ultimately they disclosed that the SEC has willingly acted in a very vague manner when defining whether digital assets are cryptocurrencies or not. And they've been doing so, for one, because they don't want to lose control and give over oversight to there's another group called the Commodities Future Trading Commission, CFTC. They don't want to give control of crypto right away to the CFTC. So there's a little bit of an infighting going on. But the other is they want to be able to hold these types of lawsuits, knowing that most digital companies don't have the resources that Ripple does, and they're going to lay down and not fight back. And that was backbreaking, in my opinion. So we're now sort of in the thick of things. About 2 weeks ago was the deadline when the SEC had to hand over all these documents, which they did not. So we might see the judge, if the SEC doesn't start cooperating, may dismiss the SEC's case, at which point everything that the SEC has come out and said, this is a security, you can't do this, that's negated, because the SEC didn't prove, because the burden of proof is on the SEC that digital assets break Securities Act of 1933 and 1934. It will be almost backbreaking for them.
Yeah. Well, that's interesting. But so let's move away from the regulation. Like, I want to know what have you found? What blockchain projects have you found, or what like kind of innovative ideas have you found that are really interesting to you in terms of companies coming out with new blockchains or even like new applications of, say, Bitcoin or Ethereum?
Yeah, there's one. Again, I'm going to put a disclaimer that I'm not what's called shilling. I'm not pitching you guys or any of you listeners any coins that I own. So this is just my personal opinion. But there's a company called MILC. It's a German media company, and what they did was they created a project on blockchain to assist with international licensing rights. Big issue in the last year with COVID is that while we were all locked down, so were the studios and actors. And ultimately there was this scramble, this arms race that happened across many of the streaming platforms to go and secure licensing rights of international shows to bring over here. You saw Gomorrah get picked up by HBO Max, which is a phenomenal show. You saw, there's another one, there's a French show that I just saw get promoted. You saw, many, of these international dubbed shows come overseas to the US and filled a bit of a content gap. In saying that, it's a nightmare. Licensing in general for TV is an absolute nightmare. And I was exposed at a very small capacity, and that was enough for me. These guys are figuring out a way for both discovery, for negotiation, and standardizing terms, which I think is very cool. And can also probably be used, when it comes to music as well, because that's streaming and royalties is a whole nother sort of pain in the neck. So I'm very fascinated by that. And I think that there are applications with blockchain that can help solve that based on sort of the current issues that exist today. And there's also, a number of other platforms in the data space that I think are revolutionary, in my humble opinion, which sort of reinvent and disrupt that whole data broker industry. Still, people don't realize it's $250 billion business. So it's $250 billion annually globally.
For which business?
And ultimately, this is for data brokers. So
data brokers, okay.
So yeah, companies, Nielsen, Oracle. There's many around the world that secure customer data and then offer it up for companies to gain access to it and syndicate. The problem is that with legislation, with all those things that are happening now, self-imposed by tech companies, the quality of that data is starting to get compromised. And ultimately, the way that these companies can collect, store, and distribute is also getting compromised. So a lot of these companies are focused in on, addressing how do companies gain access to quality first-party data in a way where the data owner doesn't lose ownership and also maintains privacy. So there's a number of projects that I think are fascinating from that space, and we'll see sort of where it goes. But the cool thing is you're seeing, these teams are running these groups, these projects. These are all veterans, from Silicon Valley, from Europe. I mean, these are people who would be running, well-backed unicorns in any other sort of scenario. So certainly bringing in a lot of talent along with the money.
Yeah. So as you put out like a lot of educational content for people, I'm sure you do a lot of research on different projects that are going on. One of the things about this space that I think it annoys people, but it also is I don't know. To me, it's just part of the landscape too. But you run into a lot of people who have very strong like ideology or opinion about what blockchains are supposed to be. Just to give a couple examples, you have like on one side, Bitcoin maximalists, like there could only be Bitcoin. And the other side, you have people who just, for some reason, they want nothing to do with Bitcoin, but they're all in on blockchain. And you're like, what? And then of course, the block size wars and all that, and the splits. So how I feel like for someone new coming in, it's like I almost want to say, okay, you're gonna run into people who are saying X, Y, and Z, not necessarily ignore them, but like be aware of it. I don't know. How do you sort of help people navigate that? Because
I think the only thing worse than speaking to like a vegan or a CrossFitter at a dinner party is a crypto investor. It's terrible because they'll just talk your ear off about it. Look, you're going to run into that, and almost the vast majority, if not all, of those people are generally investing in the speculation. The more people that buy into the story, that buy into this narrative, the more value that these projects are going to get. And that's, for me, you need to look at it in that lens. Their job is to get more people to buy it so that their holdings go up. For me, what I try to tell people is, I want to invest in companies, and I want to sort of devote my time looking into companies that, regardless of where the bull market, bear market goes, in this cycle, these are companies that are going to still be around. They're still building on blockchain because they're building businesses. There's actually commercial value. And that's sort of the model that worked even during the dot-com bust. You saw for every one Alta Vista and Dogpile, and there's many, dogs.com, pets.com.
Pets.com.
There were, there were many of these strong companies that sort of continued on and actually built up to where they are today because they built actual businesses. They weren't sort of building hype and fluff. And you see a lot of that today. And all you need to do is ask questions. Why do you like that project? Why do you like that cryptocurrency? And you can very quickly tell sort of what side they're on.
Yeah. I mean, a hard one to defend from my perspective is like the Doge stuff, where it's just like, I don't know what they're doing. But I know people have said, I feel like I'm late to Bitcoin. I'm going to buy Doge. And I'm like, don't do that. And they come back, I made all this money. And I'm like, oh no. But
yeah. And then I lost it.
Well, maybe.
Yeah.
Some people get lucky, they come in and then they get out, and then they're like, all right, but yeah, I feel like it's a market that has, there's a big pile-on effect, and it's almost multiplied in crypto. So you could have big swings that are not necessarily rational, which, if somebody's, good at trading, they could ultimately maybe exploit, but it doesn't always, the short run stuff doesn't always tell you what's going to work out in the long run, I guess.
I think of meme coins sort of as the digital equivalent of scratch off tickets. Scratch off tickets are in your face. They're at every single deli, every grocery store. And people win. People get rich on them. But the odds are you're not. And the reason being is that The people that get rich are generally the people who are either involved in pumping it up, and they're very early. And by the time it reaches, the mass people, the mass public, profits are already gone. And sort of they're already out of the market, waiting for the next one to sort of pump up. So it's important to know that if you're not actively watching crypto and sort of keeping your finger on the pulse, my suggestion is sort of look at these meme coins as a way of sort of getting rich, because odds are that you're probably late. And we see that time and time and time again. And unfortunately, it's been going on for almost since the start of blockchain. We saw it with ICOs before. Previous to that, we saw it with all of these Litecoin sort of clones. So
yeah,
they'll keep popping up. But I would say my recommendation just there's a reason that there's these pumps, and ultimately there's got to be someone who buys them. So don't be that person.
If I could, I'm just thinking off the top of my head of a good analogy, since you're coming up with analogies. Tell me if you think this works. Because I remember, like, when I was an undergrad, you had Facebook came out, you already had MySpace. I remember like other hot new social networks would come around so that we always forgot the name of, and they would just circulate through. Remember? Yeah, they would just circulate through the internet every once in a while. And in the short run, they probably got a lot of funding. They probably got people to, buy into their projects. Like, oh, I'm going to make a better Facebook. It's 2005, but and so there's always like a Me Too, or I should call it Me Too, like an also ran that comes in. But then again, sometimes you could have been mistaken and thought Facebook was an also ran. So it's hard to tell sometimes.
Yeah, for every one Instagram, you get a dig.com, which turned down, the story is they turned down $1 billion and then settled for 200,000.
Yeah.
A few years later. So,
and well, look at Tumblr too, is another one I followed, which that's a fascinating one. Okay. So another question I wanted to ask you, and I also have kind of selfish reasons for asking this, but I know it's a problem that you've thought a lot about, which is like, what's the best way of going about supporting content online? And I'm not just talking about as an individual. Like, I know as an individual, you could put up courses and stuff. I'm interested in doing it. Okay. Advice for that is good. But also, like, as we look at like the internet as a whole, like, how would you like to see, people, how would you like to see that huge resource of information we have being funded? Because it feels like something's broken about it right now, as we've mentioned before.
Yeah. And there's a few sides to that question. You have one, if you look at the way that they monetize, is it free? Is it freemium? Is it fully paid? And ultimately, there's a responsibility, for people to say, I value certain type of journalism and I'm going to support and I'll pay for their services. If not, I'm willing to see advertising, and sort of there's that agreement that goes on, and there's, a dynamic is created. The other is looking at, how these sites are built and sort of how they run. There's also an onus on advertisers too. The fact is that many high quality sites can't keep their doors open, can't keep an editorial staff who's going to actually do journalism. They're going to do 5 great things, 5 reasons that this actor got fat. Why? Because those
I can't believe I keep clicking on them. Like I'm looking for the one that was advertised on Twitter, and then I'm like, wait a minute, what am I doing? Why am I here? Yeah, get me out of this.
That's what I thought we were talking about on this podcast. I thought we were just going to talk, actors of the '90s who got fat, because I read it on BuzzFeed, and that's what I wanted to talk about.
Yeah,
I want to talk about Chelsea Peretti's brother Jonah creating some more lists for us.
Then you have to go through all of the actors that got fat, but the one that was in the picture is never there.
Oh, come on. Tell me what Tony Danza looks like, because I wanted to look like him growing up. No. But ultimately, if the onus falls on advertisers. If the advertisers are going to continue to run ads on low quality sites because they want cheap, media especially in digital. Ultimately, it's going to be hard for a lot of these publications to maintain, an editorial team to invest in the product itself. So it's complicated. It a little bit relies on the consumer and supporting those platforms that are doing the right things. Falls on the advertisers for ultimately funding it and making sure that the money is coming in and helping them sort of keep the lights on. But then the last piece is it falls on the platforms. I know this is extremely scandalous for some people, but I think that tech platforms should be responsible for the content that's on them. If you host hate speech, and it's what the definition of a hate speech is, very obvious what definitions of hate speech are. If it's questionable, it's hate speech. So not allowing that crap to sort of continue on. And ultimately what that's going to create is sort of a shift towards, I'm going to go to xyz.com because the facts are correct versus other places where I don't know if it's entertainment or information. I hope that answered your question. It's a hard question. That's a rhetorical question. I don't have an answer for it.
No, I know. Do you think that, so I want to get it, I want to ask the question on an individual basis too, but do you think there is a, obviously to get these companies to change in the way you want, it's not going to happen automatically. So do you think there's going to, do you think like, some blockchain project might be part of the answer, or do you think maybe not? I don't know. Is there any connection there?
Yeah, I mean, and there's a number of platforms that are introducing sort of these new models where you are incentivized to do sharing or to distribute certain types of articles, and if you take that and you sort of support their platform, even if you're not going to pay and open your wallet, you can then access certain levels of content, and that's a way that is good for these publications because it generates greater branding and increases sort of their user base, which helps them go back to the advertisers. But also from the consumer standpoint, you're not having to pay for every article or every publication that you want to read. And it's something that is very doable, costs you no money.
So as someone who puts out you put out some free stuff and you put out some stuff that people have to pay for. What's your strategy in terms of figuring out what's what? Like, what you're going to put out for free? Yeah, it's always a dilemma that happens. We certainly want to make all the information that we can make for free. We do. I mean, that's my problem. I don't want to put anything behind a paywall.
Yeah, but then again, there's also sort of the other dynamic, which is because we host content which could be deemed as financial advice, we want to cover ourselves from a legal standpoint as well, so that if we're telling you, here are three cryptocurrencies that we think are going to be well positioned for the next month, by having that paid contract between us and the customer, we are then covered legally. If we're just putting that out in the ether, there's a lot of gray area there in terms of, are we acting in an advisory role? Are we not? And ultimately there's a lot of liability that you could take on as a platform hosting that content. That's why you'll see, if you go on, Investopedia, if you go on Motley Fool, Zacks, Acorns, they're all investment advisor firms. They're registered either with the state or with the SEC, and there usually is some type of monetary component, either when you're subscribing to them or at least when you get to a certain level of content. And we just bring that content a lot closer to the front. Cool.
All right. So I think it's about time to wrap up. It's been great talking to you. What do you have any last thoughts about what we spoke about today, and where can people find you?
Yeah, going back to innovation, because I think you encapsulated the conversation very well with that. Right now, we are seeing this new undercurrent of innovation that, speaking as a sample size of one, I have not seen in at least 10 years. And it's exciting, and it's really it's certainly, something that's worth checking out, knowing that you're obviously listening to the show. You have an interest in tech. You have an interest in business. So, come check it out. We have a lot of different great resources, all made available for free. We certainly have more if you decide to pay, but come check us out. It's, dchain.com. So it's DCHAINED, or you can just go maximizeyourportfolio.com. Something easier to remember. So
cool.
We'd love to have more people come check us out.
dchain.com. That'll also be available on the show notes page, localmaxradio.com/191. Ed McCormack, thanks for coming on the show.
Max, appreciate it. Wonderful time.
That's the show. To support the Local Maximum, sign up for exclusive content and our online community at maximum.locals.com. The Local Maximum is available wherever podcasts are found. If you want to keep up, remember to subscribe on your podcast app. Also, check out the website with show notes and additional materials at localmaxradio.com. If you want to contact me, the host, send an email to localmaxradio@gmail.com. Have a great week.
Feel the power.